Sacramento real estate professional, and I want to talk a little bit today about loan modifications. A loan mod. What is a loan mod? A loan modification, and they come in all different shapes and sizes nowadays. Because of the new HAMP program, you might be able to qualify in that respect. But let me just explain. A loan modification is when you're more or less saying to the lender, who you owe money to on your house, hey, look, I really want to stay in this place. I don't want to have it foreclosed. I don't want to lose my home. I want to stay, but I need a little bit of an adjustment on the payments. Principal reduction doesn't happen very often, so kind of say la vie on that one. However, what they can do is they can oftentimes, say you've been like 4 months late on your mortgage, they can oftentimes reduce that amount, maybe tie it back in, give you the chance to catch up, and then knock a percentage or two off. Or if you have a 15-year loan, they can turn it into a 30-year loan, and make your payment smaller that way. So if you've got really a strong will to stay and an ability to pay, at least to a certain extent, there are more and more lenders who are working with you. But I will tell you, someone called me today and said, "Hey Tamara, you know that loan modification I got last year? They just sent me a notice it's going back to the same amount that it was." So you've got to read the fine print. And if you get a loan modification, make sure you read the fine print, because some of them will tell you that it's only good for a certain amount of time, which was the case in this person's instance. Now, again, I don't mean to be a naysayer. I know that there are some people out there who say that there are loan mods or that they do loan mods for people, and that's great. More power to you. However, I'm still not convinced that a loan modification is worth its weight in gold. Remember, and I just spoke to 2 banks today, because I was trying to keep my sellers in a house. They weren't sellers yet, and they want to stay in their house. And so my goal is always to keep them in the house if they want to stay in the house. And it really a lot depends on your finances, how much money you make. They don't want you to pay, most banks don't want you to pay more than 31% of your income to your mortgage payment. So there's a lot of different nuances, and you really need to make sure that you're working with your bank. Be very intimately involved if you're doing a loan modification. Make sure too that if a loan modification is your first choice and a short sale is your second, that you find out from the loan modification person, the home retention person, where you're at with the foreclosure date. Because if foreclosure has already started, you might still have a couple of months to do the loan modification, see if it works, and if it doesn't, then say la vie and get out of there and do a short sale. But the last thing you want to happen is that you're trying to do a loan modification, it doesn't work out to your favor, you're not happy with the results, and then you're like, okay, well, let's do a short sale. And you know what? Too late. You didn't list it as a short sale in the first place, and so now it's gone to foreclosure. So the bottom line is, if you want to try and stay in your home, the earlier you get a hold of your lender, the better. And express your willingness to stay, and do everything that you can. Just make sure you read the fine print, and make sure that you're well educated and informed as to if there is a foreclosure date in the future. So if you have any questions about real estate, if you have any questions about foreclosure, if you have any questions about deed in lieu, any of that stuff, just visit my website, www.inlovewithsacto.tv. Have a fabulous day.